Follow the yellow brick road. Follow the yellow brick road. Just kidding. Follow the interest rates. Stay tuned and I'm going to tell you exactly what that means and why it's so critically important for you right now. Hi, I'm Tracy Tam, a Florida real estate broker, and I put out weekly videos about life and living in the South Florida area and all things real estate. So if those topics interest you, please feel free to hit that subscribe button and tap that bell so you don't miss any of our upcoming videos. Hopefully we don't get wind blown away out here every time I try to film outside in my backyard. It seems like the wind picks up to like 30 to 40 mile an hour gusts. Anyways, I can't release all of the details of the news today, but I did want to share with you guys something that's super exciting that I'm going to be releasing in the next couple of days, probably next week, is that I'm working with a boutique developer here in the South Florida area, and he's actually going to be offering our customers $20,000 towards closing costs. These are beautiful custom homes in non-HOA, so there's no homeowners association. There's room for a pool. They're almost on half-acre lots, and they're in that 400 to 550 price range. So I'm super excited, and as soon as I get all of the details, y'all are going to be the first one I'm sharing it with. So let's get to it. Follow the interest rates. What does that even mean? So we all know that the media is very sensational and they're trying to get you to open up that link or read that newspaper article. But what I want to get you to do is to educate yourself on the facts. Okay, sorry about that. As you can see, we almost got blown away again, so we had to move inside. So, fact number one, there most likely will be a recession in the next 12 to 18 months. Fact number two, the last 4 out of 5 recessions have had no impact on housing prices. And fact number 3 is you can't time the market, but you can educate yourself on some of the best experts in the housing industry like Goldman Sachs, Fannie Mae, and Freddie Mac. As a real estate agent, I study the market every single day and I definitely follow those interest rates. I also reach out to my trusted lenders to stay current on the market trends. You're probably going to get sick and tired of me saying this, but I cannot stress this enough. Interest rates are at an all-time low. Let's discuss a little bit of the past of interest rates. In 1985, interest rates were right around 11%. And in 2000, they were at about 7%. Today, October 2019, they're right around the low 4% for a 30-year fixed and about 3.5% for a 15-year fixed. Let's take a look at this graphic to show you what a 1% or even a 0.5% interest rate does for your purchasing power and how it's so important to follow the interest rate. You could have an interest rate change of a 0.5% or a full percent and it dramatically changes your purchase price by $30,000 to $50,000 if you're shopping in that $400,000 price range. For example, this time last year, interest rates were hovering in the high 4s, so a 0.5% to 1% higher than they are right now. Let's say you're purchasing a home for $400,000. A 1% increase in the interest rate will increase your monthly payment by $234 a month and will also decrease your purchasing power. So that means that if you're looking at a property for $400,000, if the interest rate increases by 1%, you would actually only be able to afford a $360,000 home because of the interest rate. If you reverse that and can afford a $360,000 home at a 5% interest rate, if interest rates fell by 1%, you'd be able to buy a home at $400,000 with everything else staying the same, all because of the interest rate. That is a big difference and has nothing to do with home prices. And that is with everything staying the same, all because of the interest rate. That is a big difference and has nothing to do with the price of the home. So even if you bought a home 1 to 2 years ago, it might seem like you're paying less today, but it's not because that home has decreased in value. It's all because of the interest rates and how low they are right now. Everybody knows that home prices have everything to do also with supply and demand. So I'm not going to talk too much on that, but I will tell you that there is very little supply for that $200,000 to $400,000 first-time home buyer home, and it's in big demand. We have a less than 3-month supply of that price point. And I've been practicing real estate here in South Florida since 2005, and I personally have never seen a market like this. We have such an influx of people moving here from New York and from California and from up north. I mean, who wouldn't want to live in South Florida? It's like an amazing lifestyle where it's beautiful weather 365 days a year. But with that being said, we also have a large senior population, and those seniors are staying in their homes longer because they're living longer because of our amazing lifestyle. So our supply of homes is critically low right now, which is good if you're a homeowner and you're thinking about maybe taking out the equity in the home that you have and getting out of that homeowners association or getting that extra bedroom because maybe you're outgrowing your home or that larger yard. Now's the perfect time to take that equity out with interest rates being so low and then move up to that dream home with that pool without a homeowners association or whatever your wants are in that next home. So I'm also going to have a link below that's going to give you a instant value of your home. It's not precise because obviously I haven't seen your home, but it will give you a general idea of what the homes are selling in your area. So then you'll know about what your mortgage payoff is and the equity that you have in your home that you can use to move up to that next home. So the recession that the media keeps trying to shove down your throat and make you scared about, because I know that that word has a negative connotation, especially if you experienced the housing crisis of 2007 and 2008 and you lost everything. I get it. But this recession has nothing to do with home prices. Like I said at the beginning, to not believe all the sensationalism in the media and educate yourself on the facts. The expert economists on housing, they're actually predicting across the entire United States for home prices to continue to appreciate about 3 to 4% or 3 to 5% in some areas over the next 12 to 18 months. And actually in South Florida, over the last 12 to 18 months, depending on what price point you're in, we've seen some areas that have appreciated 11 to 15%. So we have to keep that in mind too with appreciation and low interest rates. If you are looking to buy, once again, now is the time. So as I'm ending, one last time, make sure you follow the facts, block out the media sensationalism, and seek out your local experts for advice and guidance. And once again, follow the interest rate. As always, thanks for watching another episode of Talk with Tracy, and I'll see you next week on our next episode. And once again, if you haven't subscribed to my channel and life and living in the South Florida area and all things real estate interest you, make sure that you hit that subscribe button and tap that bell. See you next week.